My name's Peter Hill. The video content that follows was taken from our Zoom seminar event where we asked 6 experts to cover the 3 big questions that they felt businesses or business owners should be focused on across 6 key areas. Selling, winning business in a socially distanced world. Know your numbers, identifying the key performance indicators for your business and acting on them. Pricing, why smarter pricing is more critical than ever. Taxation, whether it's a great year or your worst ever, tax still has a huge impact. Risk, protecting your wealth and driving new opportunities. And finally, technology, using IT to grow your business. Each expert delivered 3 short videos covering the content. As you would expect, these were filmed on iPhones and in kitchens and bedrooms, so the focus is clearly on what is said and not on the production values. We hope you find them useful.
So the last 12 months have been very expensive for the government, and we are expecting to see some tax increases come in the foreseeable future. In terms of the scale of those tax charges and how they will be brought in, it is quite interesting. But before we get to that, I think it's worthwhile just considering what has happened with some of these grants and these incentives that the government has put in place. For example, furlough money is received, corporation tax is payable on the money that's received at some point, maybe not yet, but in due course. The employees are put in a position where they've got some salary, they pay as you earn on that. Employee then goes to a shop, they buy something, they pay VAT. The business, which receives the funds, pays corporation tax. And we've got a huge circle of money that's flowing around. Sometimes tax just gets circulated around the system, and the impact, especially if you think in, well, factor in, say, inheritance tax that might be payable as well by a large number of people. We could have a situation where the deficit, when all is said and done, isn't quite as bad as everyone might anticipate. That said, there will be some pain, and the government will no doubt try to raise some tax. How will they do that? Usually they go after whatever group of individuals aren't currently in favour, and that tends to be landlords at present. And so I expect them to go after landlords. We'll see more tax charges there with a view to get more property coming back onto the housing market for first-hand buyers. NIC potentially payable on dividends, and then the big one, they're talking about aligning capital gains tax and income tax rates, which would see capital gains tax significantly increased and payable on things like share sales or the sale of your second home or sale of an investment property. So I think any prudent, sensible person will spend some time now thinking about what they should do in anticipation of these tax changes. That might involve taking a big dividend now, or even rebasing some assets. So I suggest you speak to a tax advisor and start to plan ahead for the next 12 to 24 months. So stamp duty land tax is a tax that's payable whenever you buy residential or a commercial property. It's very tempting to look at the government's website, plug in the details of the property you're buying, and then just sit back and pay a large sum of money. But that's not the right approach. It's not fair to ask a solicitor how much stamp duty land tax you've got to pay. It's not really their area of expertise. They're helping you to buy the property. They're not giving you tax advice. Instead, you've got to find a specialist, someone like myself, who can check exactly how much stamp duty land tax is payable. There are lots of different exemptions and reliefs that are available, and without spending a bit of time discussing the property, even viewing the property in person, it's hard for anyone, any tax expert, to be able to say definitively this is the stamp duty land tax that's due. You've really got to spend a bit of time researching it and getting a feel for what the property is used for, and also sometimes what the property is going to be used for in the future. There's some funny rules around intentions for the use of the property that can actually mean you can claim a fantastic relief called multiple dwellings relief. Multiple dwellings relief effectively averages the price of a property and can lead to fantastic tax savings. At its most basic level, I helped someone only a couple of weeks ago who was buying a property for around £2 million in a lovely part of Cornwall, and they sent me the property particulars, and it was clear that there was an annex there, and we were able to effectively average the price of the property for Statutory Land Tax purposes, and they saved about £55,000. It didn't take that much effort to secure the savings. It's not tax planning that's aggressive or offensive to HMRC in any way. It's just there for people to use and enjoy. It's a government incentive, and it's crazy to miss out on these things. There's lots of other little reliefs around the edges. Things like movable assets don't qualify for stamp duty land tax. That can be something like your hot tub in the back garden, depending on whether it's plumbed in or how permanent it is. And other things, such as if you're buying a business, goodwill isn't subject to stamp duty land tax. You can have flexibility as to how you allocate the price that you're paying for a business between bricks and mortar property, stock, goodwill, and that can again lead to significant stamp duty land tax savings. There's some really much less well-known reliefs. For example, the 3% surcharge is horrible, it's painful, it is very expensive. If you're buying a student property or a block of student property, there is an exemption from the 3% surcharge, which can mean that it's not payable at all. So it's quite exciting, can lead to some really good tax savings. I'd say don't be passive when it comes to stamp duty land tax. Treat it like your income tax return. Don't just let the government decide how much tax you've got to pay, because HMRC and the role as tax collectors will collect absolutely as much as they possibly can. And they won't always give you the opportunity to, and the information to, they won't share the details with you of how you can actually save some tax. So treat it as your income tax return, do your research, get some good advice, and make sure that you're not paying any more tax than you need to. The government does get a bad press sometimes, and we do kick HMRC because sometimes they're a bit naughty in the way they collect taxes. But there are also some fantastic tax incentives that are out there. There's one I like to call Creative Ideas Tax Relief. The government's name for it is something else, but it kind of doesn't really fit with what it actually is. It is a tax relief that delivers tax savings and also tax credits. So usually if you spend some money, your company will get corporation tax relief at 19%. With this relief, if you spend money on a creative idea and you're a novel idea, then the tax relief is increased significantly. And if you wish, you can actually, if you're not making profits, you can actually claim a tax credit from the government. And it is very generous. You could, let's say you spend £100,000 on something, rather than you getting, say, £19,000 worth of tax relief, you can almost double or more the tax relief that you're getting. And I find that this was really, really useful over the last 9 months, 12 months. A lot of businesses hadn't really taken this relief that seriously. And when we were able to really grab people's attention and discuss it in a bit more detail, we were able to help them identify, business owners identify, the different innovations that they had actually come up with, which qualified for the relief. So over the last few years, so people are creative, they are coming up with new ideas, new processes and things like that. And the government does want to encourage that. So just by working with us, preparing a report which summarized these innovations and these ideas, we were able to then take that report, put it in the right format, which HMRC expects to see, and then send it off to them. And we were able to help lots of businesses get back some really, really chunky repayments, tax repayments, at a time when it was really, really important for them to keep cash flow flowing. So what I don't want to do is to go back to the normal and for businesses to miss out on this great relief. It's not that complicated to claim. There are lots of boutique companies, tax companies that are springing up, trying to take advantage of people and to claim big shares of this fantastic tax relief, when really the most of the benefit from it should be going to businesses so that they can reinvest in different ideas going forwards. I say it's creative ideas, new novel ideas, the sort of thing that you might look for is if you're trying to extend the shelf life of a product, or you're trying to fit in a new bespoke energy system, Or even, let's say you work in construction and you come up with some sort of an idea that allows your builders to work in different weather conditions by building some sort of ramp on wheels or whatever, or you have to alter your site in some sort of way, to make a development feasible, and you have some creativity, some ingenuity, then that can qualify for the relief as well. So please do something for me. When you finish today, have a think back over the last 12 months or 2 years, and have a think about what creative ideas you come up with, what developments have you made that have made your business more successful, and share those with me, and I'll tell you whether they qualify for this fantastic tax relief.